Right, let's have a look at some good sample questions from the March-June 22 exam. And these is what the AA examiner came up with as being really good questions to look at. So first of all, just have a look at this then. The first bit, an audit is an example of what type of assurance? Is it limited, reasonable, or both? Well, an audit, even though an audit's quite a difficult job, it still only gives reasonable assurance, okay? Not high or absolute, just reasonable assurance. Which of these provides a lower level of assurance? Well, obviously a lower level of assurance then must be the limited one. Judgment is required when doing the job of either a limited or a reasonable or both. Yeah, you're always going to need a bit of judgment in order to give assurance, aren't you? You can't give assurance on something unless you're making some form of judgment, so that's for both. And then a negative form of conclusion, so nothing's come to my attention that makes anything seem wrong. That's what you put when it's a limited one. When it's a reasonable one, like it's an audit, you give a positive assurance, it's a true and fair view that everything is okay. All right. Good. Let's move on then to the second question. Which two of the following tests, ignore the companies for now, we'll look at that later. Which two of the following tests would you carry out if you were doing a limited assurance? So, would you inquire of management, just ask management, about some large and unusual items? Yes, you probably would. That's not too much like hard work. So inquiry of management you do in a limited assurance. Do you perform analytical procedures to understand relationships and trends? Has sales gone up? Has cost of sales gone down in line with each other? Is that part of a limited review? Yes, it is, because it's not that much like hard work either. Perform tests of control so we understand all the controls that are operating within the company. No, we don't do control testing. That's far too much like hard work for a limited review. We do that on an audit, on a reasonable assurance. Do we perform extensive tests of details, overall balances? Again, no, we don't. That's for an audit. So it's just the first two. Third question then, a little bit of a scenario. So we have the board directors of this company, and what they've done is, for their company, they've set some key performance indicators. So far, so good. And they've asked Doge & Co. to just do an assessment for us, to do a limited review, basically, and then prepare a report for the board, not for shareholders, but for the board, as to whether the KPIs have been achieved. And we're going to provide them access to the books and records to do this. So, which of the elements required by the framework is not present in this agreement? A, there must be a three-party relationship. Yes, there must be a three-party relationship. That's a user of the accounts, a preparer of the accounts, and a reviewer of the accounts. Or in this case, a user of the review, a preparer of the review, and a reviewer who's doing the review. The problem here is the preparer is the board, but the user is also the board. Okay, so the preparer and the user, you're not making it for shareholders, so there's no three-party relationship here. And so that's the one that's missing. That's what makes it not an assurance engagement. There is appropriate subject matter, the KPIs, that you can collect sufficient and appropriate evidence. We said we'd give them over, and we have asked for reports. It's just that there's not the three people, so that's the right answer. Question 4 also looks at a little scenario, so let's have a look at that. Keegan's a client of ours, and they're considering setting up an internal audit department. They're not sure whether to do it themselves or to outsource it. So they've asked us, if we're Doge & Co., to whether we could do the internal audit for them. So can the external auditor do the internal audit? Okay, so it says, well, the risk of the auditor assuming management responsibility, so that's what you can't do. The auditor can never be seen to be managers of its audit client. So the risk of them assuming management responsibility would be reduced by us using a separate team of staff who aren't involved in the audit. No, because you've still got the same team of staff, you're still going to be involved in their business, and so therefore you still might look like you're taking management responsibility. So that's false. What about this one? We should consider whether they've appointed a responsible official to oversee the internal audit? Yeah, we do. We want them to have a responsible official, a quite a high-ranking person to do the internal audit. And finally, the materiality of the financial statements affected by the internal audit service should be considered when evaluating self-review. Yeah, you should always consider materiality. So that's true as well. Okay, on to the fifth and final question. And we've got Doge & Co. So let's say we're the auditors, we're Doge & Co. again. We've just accepted a new client called Let. But their previous auditor, who was called Cat, resigned from the audit just a month ago. Okay, we were appointed 4 days later, and in the early stages of legal action against Cat & Co. for failing to detect a fraud. So basically, this new client of ours is suing their old auditor, okay, because they didn't detect a fraud. All right, so let's have a look. Which of the following would be an inherent, I'll get it right in a minute, an inherent limitation of the audit? Okay, so could the old auditor, who was auditing the company for the first time and the business was new to them, would that be a reasonable excuse? Is that an inherent limitation because you're doing the audit for the first time? No, because if you're doing the audit for the first time, it makes life harder, but you just have to do more work. So it's not an inherent limitation of the audit. Okay, you overcome that because you do more work by getting to know them. Due to tight reporting deadlines, they had a limited amount of time to complete the audit. Is that acceptable? Is that an inherent limitation? No, it's not. You know, the audit takes as long as it takes to get it done properly. What if the old auditor had relied on the truth of information given to them by the company's staff? Is that an inherent limitation? No, you ask for the information, but you don't rely on it. You have to show professional skepticism and try and see whether that can be backed up. So the answer must be D. How can they use, as they used audit sampling in performing tests of details, is that an inherent limitation of an audit? Yes, it is, because that's what we do. We don't test everything. We test a representative sample. And so therefore, that's why we can only give a reasonable assurance. We can't give an absolute assurance because we don't test everything. We actually do audit sampling. So that would be an inherent limitation of the audit. Hope you found it useful.